Hello viewers, in this video I'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. In this video we'll be going over day-by-day probability and the forecast model for Gold Miners Jr. So back to the technical analysis. Today we are up 42 basis points. On the 1 hour chart we are seeing a divergence on the MACD. It is still positive. And as for the 4 hour chart, we're still overbought on the RSI, and we're beginning to see a divergence on the 4 hour MACD. However, we are seeing support on the 9 moving average. For the daily chart, we're very near overbought RSI on the daily chart, and the MACD is quite healthy on the upside. As we see, there's no divergence or nearing divergence. And for the support, we are quite far from the 9-day moving average, and I'll mark that as our next immediate support. And that price level also coincides with past resistance, and since we are above the resistance line, that now acts as our support. So the 9-day moving average will be our immediate support at the price of $40.50. And as for resistance, if we expand out to multi-years, we see past resistance around the price of $42.77, and we are quite near that level as well. So we have about 1 point here, 2 points, 2 points at this year. So in all, we have 3 points, and we are also at that level as well. So at the moment, if we were to move down lower, that price movement is roughly around 4.8% to the downside, and at the moment we are currently at resistance. So let's head to the day-by-day probability model. So on this model, what we see is we have a higher chance of dipping lower for Gold Miners Jr., and we only have 1 day where we may even climb up to 2% or 1 standard deviation up. Overall, throughout the day or as the week progresses, we see a higher chance of Gold Miners Jr. dipping down between 5 to 2% or even 0 to 2% down. So I do expect that to happen. And back to the forecast model on here, I'll go day by day where Gold Miners Jr. will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to July 21st to October 14, 2015. So let me point out why these two charts are similar. So what we have in the beginning of the trend, we started off touching the bottom Bollinger Band, or fairly below the middle Bollinger Band, and then we proceeded to touch the upper Bollinger Band at this instance. And next we see sideways price action, and then we again touch the upper Bollinger Band at this instance as well, and the third one right towards the end. So we have those points there. So in the trend in question, we start to see a similar pattern. We start off below the middle Bollinger Band, near the bottom Bollinger Band. Next we make a reversal to touch the upper Bollinger Band. And then next we see it touch the next upper Bollinger Band as well. We see sideways price action in between. And finally, right towards the end, we see it touch the upper Bollinger Band. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there is reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was July 21st to October 14, 2015. Back then, Gold Miners Jr. was down roughly around 3.2%. So it's favoring to the downside. It's going to be very near the 9-day moving average as indicated on the technical analysis chart. So I do expect that to happen next coming days. So Again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.